The algorithm. What is it? How does it work? Kind of to give you like a brief understanding, brief idea. Because I know there's not a whole lot for me to talk about because the system I built is super simple. It's very straightforward. But like I said, I've been getting some questions. Obviously, I've got this script on Thinkorswim, and this script is what I use to determine where I'm going to be wrong and where I'm going to be right. So, how I'm going to go about managing each and every trade that I take. And you'll see that I post, my chart within the trading callout section. And my chart will contain this green line and this red line. And these two levels, this green line and red line, that's not me setting those levels, making a green line, making a red line. That's already been done for me, or it's being done for me by the algorithm when I enter the criteria here. I don't even know what this chart is. It's just pulled up. So essentially, it's the algo I have plugged in here. It's going to ask me for a couple criteria, and I'm going to go through. I'm going to enter that, and you'll see me doing that every time we enter a trade on the stream, right? Or maybe in a YouTube video. But how does it really work? Fundamentally, the script, what it does is it takes into account the last 30 days. So I'm trading on a 1 minute 30 day, right? So I can go back 30 days. And each stock we trade, every stock is going to kind of paint a different picture, tell a different story. So some stocks are going to move a lot different than others. Like Apple, for example, is only going to move maybe on average 1% or 2 a day, or 1.5%. While other stocks like Futu, what we traded the other week, might move 7-8% on a normal day. And so the first thing it does is kind of identify, well, what is that stock's like natural behavior? How does it move? And what, amount of area is that specific stock covering? So the algorithm does not have anything to do with the option contracts I'm buying. It solely works off of, well, what is historical data on the chart. And it plots out these levels. These are, I don't even want to call them necessarily levels. I like the word projections better. Well, it plots out these projections for us. And all it's saying is that based off of historically, over the last 30 days, how that specific stock has moved, based off of these ranges it covers, how high does that stock trade, or how high has it traded over the last 30 days on any given day? How low has it traded? What are the averages? How does it move? Well, it's using this historical data. And then at the same time, it's going to take into account probabilities. Now, the probability thing is a little bit harder to explain, so we'll kind of save that for a later talk. But as far as historicals, it does take into account exactly how that stock is moving, and then it'll give you a projection as to where or how high or how low, right? Based off of stop loss or take profit, that ticker could move. Okay. So this is not like a technical analysis strategy. It has nothing to do with candlestick patterns or candlesticks in general. This is this is just a visual line, a visual representation, but we don't even need to use these lines. It's just for the purpose of everything that I'm doing with you guys. It makes it easier when you can see on a chart very visually where I'm wrong and where I'm right when I share my trades. All we really would need is like our share price, right? 814.39 or 790.80, 790.87, right? We only need these two share prices. So we'd have our share price for stop, our share price for take profit, and I wouldn't even need a chart, right? So this does not actually require a chart to, for me to be able to make decisions. This is just something important. I don't use candles, right? I'm not looking at a candlestick chart to determine any of the decisions, or I'm not making decisions in the first place, but the algorithm is not using an actual candlestick chart, right? Or any technical analysis to determine where to set that stop and take profit. It's simply historical data, right? It is actual historical data. And then all of trading is all about data. It's all about probabilities. So what we're doing is we're looking at historicals, we're looking at averages, we're looking at how that stock moves, and then we're able to kind of scale that out on a scale of probability to probability to see where that stock might move and how high or how low that might move. And then the even more complex part is that we actually do also incorporate this level of risk, like risk management, right? I talk about this all the time. It's very hard. This is fundamentally like what you have to do to become a successful trader. You have to cut your losers fast and let your winners run. And it's very, very hard to actually cut your losers fast and let your winners run. And then it's like, okay, at what point do I cut my loser in relation to how much I let my winner run and vice versa? And so it also does that for us. It's also going to, I'm not really showing you anything on my screen right now, but it also is going to factor in this level of risk management that we do need in our trading, right? And it's going to allow us to let our winners run, well, obviously limiting our losers, our losses. So I don't know what this one is. I have pinned up here. I forgot what this was from, but if I just chart out from our entry to stop, it's about 2%. And if I chart out entry to take profit, it's about 4%. So you'll always see this whenever I post a chart, that the take profit is typically over 2 times what the stop loss is, right? And then where, at which point? Well, like I said, we're using probabilities, and that is factored in with the win rate that we're achieving. So obviously making sure that we maintain a favorable win rate with our risk to reward that we're taking to, at the end of the day, overall be profitable. So if you want to kind of do this on your own, like I said, without the probability aspect of things, without the risk management aspect of things, but just to understand fundamentally how the algo works, it's pretty simple. All you would do is you'd go back and you'd go through all 30 days. So let's go back and we'd go back to like the first day. We'd work our way again through all 30 days, and we'd use a drawing tool, for example, on my broker, this trend line tool. And that's going to let us chart out. What we're going to do is we're going to measure the distance between the lowest point of the day and the highest point of the day that stock traded. So the lowest point of the day that now traded on this day was whatever, 997, and the highest point was around 1031. And we could see that's 3.34%. So we'd write that down, 3.34. Now let's go to the next day. Let's find the highest point, okay, NOW traded, and the lowest point, or highest to lowest, highest, it doesn't matter, but you want to know the difference. So lowest to highest, we're looking at 4.48. Okay, now let's go to the next day. We're going to take the lowest, which looks like here, right? Essentially right off the open, lowest point of the day, to highest point of the day. Bring this over a little so you can see it. To highest point of the day is 1 point. Let's see, it's about there, 1.75. So you take whatever that was, 3.44, 4 point, I forget, 2.28, and then 1.5 or whatever. You'd add those up. That would obviously be done over 30 days. You'd add up all the percentages, then you just divide that by the 30 days. And then you understand, well, what are our ranges here? What is our average daily range, right? What is our ADR? And then that will give you an understanding, whatever that percentage is after you divide, well, then you can go about just drawing a line, okay, on your chart for your stop and take profit. And that would be based off of when you enter. This can be done like during pre-market if you're looking to, enter a trade off the open. But this would be, you'd want to play off of where that stock, this is what I mean by like the algo kind of does it all for us automatically. And it's a little harder to figure out relative to that specific day, how much that stock is up or down. But by taking into account the last 29 days, technically, that should give you still a very accurate representation. If we were to enter a position now and let's just say, for example, just went through all 29 days, we saw that, our average daily range on NOW is 3.5%. Then what we could do is, let's say this is our entry, we could chart up 3.5%. Okay, 3.5% would just be about there. And then at that point, you could manually just draw out your line there. Let's say this would be our take profit. And then as far as our stop, well, let's again just to keep in mind, we want to let our winners run and, mitigate our losers, cut our losers fast. Generally, somewhere around a 1 to 2 R is somewhere where you'd want to be. So, in theory, again, this is an easy way to do it yourself. Let's just split that in half. So what would that be? 1.75%. Or it could be, there's no right or wrong answer. So really, ideally, what you're trying to do is you're trying to find a balance between your win rate, risk to reward on the, given levels. Obviously, looking at historicals, making sure that you're setting it at a point that would actually be hit. So like, let's set a stop loss 1.75% below. And if our average daily range is 3.5, like there's a very good chance it's going to get hit. Like the probability that, from that point throughout the last 29 days that now moved down 1.75%, I don't know what the exact probability is, right? I have to figure that out. And the probability that now moved up 3.5% over the last 28 days is probably pretty high. And if it's way, way, way higher, then the probability to hit stop, well, we can push that a little bit. We could get more aggressive. We can let it run a little more until that probability is at a place where that makes sense. So, it is a little bit complicated when it comes to that, but generally you can easily chart out the average daily range, just, doing the measurements there, and then draw up, draw down, draw up again, whatever that average daily range is. And then I draw down half of wherever that average daily range is. So for your stop, like I said, 1.75 would be our stop, which would be about here if our take profit is at 3.5. And then this would be our stop. Okay. So like we're not getting any directional bias. I just randomly said, hey, this would be our take profit. Hey, this is going to be our stop. Obviously the software is what gives me not just the stock to look at trading, and also it gives me the directional bias. So like I have no idea what direction I should bet on now going right now. I don't even know if I should trade now. I don't know if now is going to go up or down, but it could be the opposite. Let's say you want to bet on now going down. So you would just switch these around. So the stop would be, a half the take profit to the upside, and the take profit would be the full ADR to the downside. So again, it's about playing with those levels. But I just want to show you guys, I don't use technical analysis anymore to make my trades, make my trade decisions, manage my trades. It's all based off of historicals. And like I said, trading's all about probabilities, and it's all based off of the probability of how much that stock is going to move on any given day. And then making sure that that's also incorporating a level of, risk management, right? So that's just like a rundown on how the actual algo does work, okay? So if you see me pull it up during one of the sessions, then you kind of know what I'm doing and obviously like what's happening there. So any questions after just running through that? And I'll clip this. If you want to go back and watch this after, I'll clip this and I'll put it in the recorded sessions as well. Setting ADR for daily open or strike price. So I'm not quite sure what you mean. It has nothing to do with the contracts. It's going to be based off the stock you're trading, right? So you're going to look at the specific stock that you're trading, and we just used NOW for the example. You're going to go back 30 days and you're going to do what I just did. But yeah, watch this again after. And there's no symbol for probability. It's just math. It's just equations. But it's like again, there's ways you could do it manually. I just don't know. That's all built in to be automated through the script itself. So, but at least to again have an understanding on what's happening on my chart. Now you should know.